You've worked your entire life. Decades of early mornings, late nights, sacrifices, every paycheck carefully saved, every investment decision agonized over. And now, as you look at your retirement accounts, something doesn't feel right. The numbers are bigger than ever. Your 401k shows 6 figures, maybe 7. But when you go to the grocery store, when you pay your insurance, when you look at what things actually cost, those numbers don't buy what they used to. And deep down, you know it's getting worse. Here's what nobody's telling you. The money you've spent your life accumulating is being systematically devalued, not by accident, by design. And the people who understand this, the central banks, the billionaires, the institutions managing trillions, they're not sitting in cash. They're moving into something else entirely. Let me show you what's really happening right now. Central banks just bought 634 tons of gold in the first 3 quarters of this year. That's not normal accumulation. That's panic buying. These are the same institutions that print the money you're holding. They create dollars, euros, yen out of thin air. And yet, they're trading that paper for physical metal at the fastest pace in modern history. Think about that for a second. The people who control the printing press are choosing gold over their own currency. What do they know that you don't? Gold just crossed $4,000 per ounce. Not $2,000, not $3,000, $4,000. That's not a bubble. That's a repricing. The market is finally waking up to what central banks figured out years ago. Fiat currency is in trouble, and gold is the only real money that's survived every empire, every crisis, every currency collapse in human history. But here's where it gets interesting. This isn't just about price. It's about a fundamental shift in how the global financial system operates. And if you're holding your wealth in dollars, bonds, or traditional retirement accounts, you're on the wrong side of the biggest wealth transfer in generations. Let me paint you a picture of what's actually driving this. China and Russia have been dumping U.S. treasuries for years. Not slowly, aggressively. They're taking those dollars and converting them into gold. The BRICS nations, Brazil, Russia, India, China, South Africa, plus the new members, are building an alternative financial system. And at the center of that system isn't the dollar, it's gold. Saudi Arabia just let their 50-year petrodollar agreement expire. For half a century, oil was priced exclusively in dollars. That arrangement forced every country on earth to hold dollars in reserve. It gave the U.S. unprecedented power. That's over now. Saudi Arabia is now accepting yuan, rupees, even discussing gold-backed settlement systems. This is the de-dollarization everyone warned about. And it's not coming. It's here. Meanwhile, the U.S. government is running deficits that would have been unthinkable a decade ago. We're adding $1 trillion to the national debt every 100 days. The interest payments alone now exceed our entire defense budget. There's no mathematical way to pay this back. None. The only option is to inflate it away. And that's exactly what they're doing. Your dollars are being diluted. Every new trillion printed makes your existing dollars worth less. It's not inflation in the traditional sense. It's currency debasement. The Romans did it by clipping coins. We do it with a keyboard and a printer. But gold? Gold can't be printed. Can't be created by central banks. Can't be inflated away. There's a fixed amount on Earth, and it takes real resources, real labor, real energy to extract it. That's why it's held value for 5,000 years, while every fiat currency in history has eventually gone to zero. Now, I know what you're thinking. Gold doesn't pay dividends. It just sits there. And you're right, gold doesn't generate cash flow. But here's what it does do. It preserves purchasing power across time. An ounce of gold in 1920 would buy you a quality men's suit. An ounce of gold today will still buy you a quality men's suit. The dollar? In 1920, $20 bought that suit. Today, $20 won't even cover the alterations. That's the difference between real money and currency. Currency is a claim on value. Gold is value. And right now, we're watching the greatest currency crisis in modern history unfold in real time. The signs are everywhere if you know where to look. Commercial banks are sitting on unrealized losses in the hundreds of billions. Their bond portfolios, purchased when rates were near zero, are underwater now that rates have spiked. Silicon Valley Bank wasn't an isolated incident. It was a warning shot. More banks are in trouble. They're just hiding it better. The commercial real estate market is imploding. Office buildings in major cities are worth 40, 50, 60% less than their mortgages. Those loans are on bank balance sheets. When they default, and they will, it's going to cascade through the financial system. Credit card debt just hit record highs. Auto loan delinquencies are spiking. Consumer savings rates are at historic lows. People are tapped out. They're living paycheck to paycheck, and one unexpected expense away from crisis. This is the backdrop. This is the environment we're operating in. And in this environment, the smart money isn't asking, should I own gold? They're asking, how much gold should I own? Because here's the thing about gold. It's not an investment. It's insurance. It's the asset you hold when everything else is questionable. When you don't trust the banks, when you don't trust the government, when you don't trust the currency, you hold gold. And the institutions know this. That's why central bank buying is at record levels. That's why billionaires are allocating larger percentages of their portfolios to physical metal. That's why gold ETFs are seeing massive inflows despite the price being at all-time highs. They're not buying gold because they think it's going up. They're buying gold because they know what's coming down. Let me tell you about what happened in Weimar, Germany. In 1918, you could buy a loaf of bread for half a mark. By 1923, that same loaf cost 200 billion marks. People were burning money in their fireplaces because it was cheaper than buying firewood. Wheelbarrows full of cash to buy groceries. Life savings wiped out overnight. But you know who survived? The people who held gold. While paper marks became worthless, gold maintained its purchasing power. An ounce of gold bought the same amount of goods in 1923 as it did in 1918. The currency collapsed. Gold didn't. Or look at Venezuela. In 2012, the bolivar was 4 to the dollar. Today, it's over 36 million to the dollar. Hyperinflation destroyed an entire nation's wealth, except for those who got out early, those who converted their savings to gold or dollars before the collapse. But that can't happen here, you're thinking. We're America. We're different. Are we? We're running the same playbook. Massive deficits, unlimited money printing, currency debasement. The only difference is scale and speed. But the destination is the same. And here's the uncomfortable truth. Your retirement account, your savings, your life's work, it's all denominated in a currency that's being systematically destroyed. Every day you wait, you're losing purchasing power. Not might lose, are losing. Right now. The stock market might be at all-time highs, but price it in gold instead of dollars, and it's been flat for years. Your 401k might show bigger numbers, but what does it actually buy? That's the only question that matters. Now, I want to be clear about something. I'm not saying sell everything and buy gold. I'm not saying the dollar is going to zero tomorrow. What I am saying is that diversification into hard assets, real physical assets that can't be printed or inflated away, is no longer optional. It's essential. And for a lot of people, especially those with significant retirement savings, a gold IRA makes a lot of sense. If you've got $100,000 or more in traditional retirement accounts, you can actually move a portion of that into physical gold without taking a distribution or paying penalties. It stays in the tax advantage structure, but instead of holding paper assets, you're holding real metal. I put together a free guide on exactly how this works. It's in the description below. Covers the mechanics, the rules, what to watch out for. No obligation, just information. Worth looking at if you're in that situation. But whether you do a gold IRA or just start stacking physical metal outside of retirement accounts, the principle is the same. Get some of your wealth out of the system, out of the banks, out of paper promises, into something real. Because here's what's coming next, and this is where it gets really interesting. The gold price at $4,000 is just the beginning. We're in the early stages of a repricing event that's going to shock people. And I can prove it with simple math. The U.S. government owns about 8,100 tons of gold. At current prices, that's worth roughly $1 trillion. Sounds like a lot, right? Except we have $36 trillion in debt. Our gold reserves cover less than 3% of our obligations. Now, what if, and this is a thought experiment, what if the government decided to back the dollar with gold again? Not fully, but partially. Say, 40% backing like we had under Bretton Woods. What would the gold price need to be? You'd need the value of gold reserves to equal 40% of the money supply. M2 money supply is about $21 trillion. 40% of that is $8.4 trillion. We have 8,100 tons of gold. Do the math. Gold would need to be priced at over $32,000 per ounce. Now, I'm not predicting that happens, but I am saying the current price of gold relative to the money supply is historically anomalous. Gold is undervalued by any historical metric. And as more people wake up to this reality, as more institutions move to protect themselves, the repricing accelerates. We're already seeing it in the physical market. Premiums on gold coins and bars are elevated, delivery times are extending. The U.S. Mint has had to ration production. These are supply constraints showing up in real time. And here's the kicker. Most of the gold trading in the world is paper gold. Futures contracts, ETFs, unallocated accounts. It's estimated that for every ounce of physical gold, there are 100 ounces of paper claims. That works fine until people start asking for delivery. Then you find out how much gold actually exists. This is what happened in the silver market in 2021. Reddit traders figured out the paper-to-physical ratio and started demanding delivery. Premiums spiked. Dealers ran out of inventory. The price shot up. Then the exchanges changed the rules to protect the shorts. The same dynamic exists in gold, just on a much larger scale. And when the scramble for physical metal really begins, when institutions and sovereign nations start demanding delivery instead of accepting paper promises, the price is going to do things that seem impossible right now. But you don't need to predict the exact price to make the right decision. You just need to understand the trend. And the trend is clear: away from fiat currency toward hard assets. Away from paper promises, toward physical metal, away from the system, toward sovereignty. This is about more than just making money. It's about preserving what you've already earned. It's about making sure the decades of work you've put in actually mean something when you need it to. Because here's the reality. The government can't save you. They're the ones creating the problem. The banks can't save you. They're over-leveraged and fragile. The stock market can't save you. It's priced in a currency that's being debased. The only person who can protect your wealth is you. And the only way to do that is to hold assets that exist outside the system. Assets that have intrinsic value. Assets that can't be printed, inflated, or confiscated with a keystroke. Gold is that asset. It always has been. It always will be. Now, I want to address something I hear all the time. The government could confiscate gold like they did in 1933. And yes, FDR did issue Executive Order 6102 requiring citizens to turn in their gold. But here's what people forget. They paid $20.67 per ounce for it, then immediately revalued gold to $35 per ounce. So even in the worst-case scenario, gold holders got compensated and then some. But more importantly, that was a different era. Gold was the official money. Today, it's classified as a commodity. The legal framework is completely different, and even if they tried, enforcement would be nearly impossible. How do they know who owns gold? There's no registry, no database. Physical gold held privately is anonymous. This is actually one of gold's greatest features. It's the ultimate privacy asset. No counterparty risk. No third party that can freeze your account or block your transaction. It's yours, completely and totally. And in an age where governments are pushing digital currencies, where every transaction can be monitored and controlled, where your bank account can be frozen for political reasons, that privacy, that sovereignty, is invaluable. Central bank digital currencies are coming. The Fed is already testing them. China has already rolled out the digital yuan, and when they arrive, they'll give governments unprecedented control over your money. They'll be able to see every transaction. Program expiration dates into your currency. Limit what you can buy. Freeze your funds instantly. This isn't conspiracy theory. This is stated policy. They're telling you this is what's coming. And when it does, physical gold becomes one of the few ways to transact outside the system. But even if none of that happens, even if the dollar remains stable, the banks stay solvent, and the system muddles through, you're still better off with some gold. Because gold is the ultimate diversification. It moves inversely to paper assets. When stocks crash, gold rallies. When currencies weaken, gold strengthens. It's the ballast in your portfolio. And right now, with everything stretched to extremes, stock valuations at historic highs, debt at historic highs, geopolitical tensions at historic highs, having that ballast isn't just smart, it's essential. Look at what's happening geographically. Wars in Ukraine and the Middle East, tensions with China over Taiwan, the fracturing of the global order into competing blocs. Every one of these conflicts increases the risk of financial contagion, of sanctions, of frozen assets. And in that environment, gold is the only truly neutral asset. It's not Russian gold or American gold or Chinese gold, it's just gold. It's accepted everywhere. It's valued everywhere. It's the ultimate form of portable wealth. This is why refugees throughout history have sewn gold coins into their clothing, why families have buried gold in their backyards during wars, why gold has been the go-to asset in every crisis, every collapse, every upheaval for thousands of years. It works. It's proven. It's reliable. And right now, at this moment in history, with all the warning signs flashing red, with central banks buying at record pace, with the currency system showing cracks, this is not the time to be complacent. This is not the time to assume everything will work out. This is the time to act, to protect what you've built, to ensure that your hard work, your sacrifice, your decades of saving actually preserve their value into the future. Because the people who wait, who assume they have more time, who think, I'll do it later, they're the ones who get caught. They're the ones who watch their purchasing power evaporate. They're the ones who realize too late that the rules changed and they weren't prepared. Don't be that person. Don't let decades of hard work evaporate because you didn't take action when you had the chance. The gold market is telling you something right now. Record prices, record central bank buying, record institutional demand. This is not noise. This is signal. And the signal is clear. Protect yourself. Your retirement should be secure. Your savings should be safe. Your life's work should mean something. But in a world of unlimited money printing, of currency debasement, of financial instability, paper promises aren't enough. You need real assets. You need gold. And you need it now, while you still can, before the next crisis hits, before the scramble begins, before everyone else figures out what the smart money already knows. This isn't about getting rich. This is about staying rich, about preserving what you have, about making sure that when you need your money, it's actually there and it actually buys something. That's what gold does. That's what it's always done. And that's what it will continue to do long after every fiat currency in existence today has gone to zero. The choice is yours. Stay in the system and hope for the best, or take control, diversify into hard assets, and protect yourself regardless of what happens next. The institutions have already made their choice. Central banks have made their choice. The billionaires have made their choice. Now it's your turn.